This is your friend Vivek Bajaj, co-founder of StockEdge and Elearnmarkets. Friends, Mukesh Ambani recently said that data is the new oil, and the whole world is realizing the importance of this sentence. In fact, if you see most of the new businesses which are evolving, all the major businesses are around data. For stock market guys, this is not a new sentence. I mean, we have been using data for eternity, and I strongly believe that what kind of data stock market offers, no other industry can provide. And people who know how to decode that data can create tremendous wealth out of this market. Today, in this face to face, which is going to be an English face to face, I have two guys talking about how they decoded the science of data in a financial market. And while they were working in some large conglomerate or business house, they decided to move out of that job and started their own data oriented financial market participation. Very, very exciting, particularly also because they also follow relative strength theory in their own way. So I always get very excited when I hear someone talking about relative strength. So friends, this is another great face to face. I still remember that face to face which I recorded by with Pramal Bhai, and this is going to be one of those face to face if you want to learn my science or their science or the science, universal science of relative strength in their style. Let me welcome Sai and Shri into the discussion as we decode the science of financial market data. Hi, hello guys.
Hi
Hi,
Vivek, good morning.
morning.
So this is very exciting. I have two guys now, and for face to face, so it's like face to faces. I hope you guys are doing good.
Absolutely, absolutely.
Doing great, Vivek. Yeah,
And
So
thank you for having us here, Vivekji, and thank you for giving us the opportunity.
it's my
and it's a
pleasure.
pleasure joining us here. Yeah,
So I know you guys are doing some great work. I saw you on Twitter and the kind of posts you guys are making. You have a company. We're going to talk about that company. I'm sure you have certain value-added services which you offer to retail as well. So we are going to talk about that. Although I don't have any commercial relationship with you guys, but I love what you're doing, specifically in the domain of relative strength. So I thought you should come and use my platform to help my learners decode the science much better than probably what I have done. So how do we do it? Should we have Sai start and then Shri
Yep.
or yeah?
I I I think
we'll.
I'm
Yes,
appearing first on the camera, so I go first, and then
he always does
Awesome,
that.
awesome. So you guys are
okay.
based out of Bangalore?
I'm in Chennai.
I am in
Okay.
Hyderabad.
Oh, okay. Wow. That's a beauty of stock market, financial market that people can collaborate, work together from any corner. In fact, I remember I recorded something similar. Someone was there in Boston and his partner was in Bangalore, and both of them working together. In fact, that advantage of time where when he stops working, the other one
Other
starts
guys,
working. So literally the whole organization is working for 24 hours. That's so exciting. So let's start with a brief introduction about both of you, why you are doing this, and give me a background about you, and then we go deep dive into the presentation which you have made for us.
So absolutely. Thank you. And once again, thank you for giving us such a wonderful opportunity and having us here, Vivekji. I'm Sai, based out of Hyderabad. I've done my MBA in finance, um, and then I've been working for corporate in playing different roles, senior leadership roles, for about close to 20 years now, and into the stock market for about 10 years. Made my own quota of mistakes. Earned less money, lost more money, like any others do. So I think mainly if I introspect myself, I think that was because of the belief that I had that if I work for an organization and wherein the time is not in my control, where I ended up spending more than half a day at work, it is impossible for me to probably spend time in my own investing, right? Be it reading about the companies, reading about the fundamentals, technicals. There are different ways you analyze a company.
Mm,
So obviously, that approach definitely costed me and proved me wrong because I started incurring huge losses. Stock market has its own way of teaching you the lessons, right? If you really don't care about the stock market. And then over a period of time, I definitely realized that I think this is not the way, because I'm actually investing my hard-earned money, right? I work for 30 days, I sweat out to get my paycheck, and I take some portion of it just to invest, anticipating that it will create some wealth for me over a period of time. But if that capital is deteriorating, it's of no use. So that really triggered that I think if really I have to be in the game, I have only two options. One, I have to find a different asset class to invest, or I have to invest time into the equity market before I really invest my money into it. So then I started investing my time before investing my money, right? Really spend a lot of time after my office hours, sacrifice a lot of weekends reading through different white papers, fundamentals, technicals. First of all, how to read a company, right? Start from fundamentals. Then how to read the chart. It's an ocean, right? There is no end to it. But we really started making some sense out of it. And then we wanted to really bring in our job experience into the application, right? We deal with a lot of data, right? And stock market is known for data. How can we really leverage this data to our advantage, right? And that's the point. And Shri and I kind of started thinking on as to how we really probably build something for ourselves. Forget about anyone else, right? It's our money which is at stake. How do we really probably bring something to us wherein initially probably we will spend time and effort, but it has to be a self-sustained model over a period of time wherein you would invest less time, but it will be an autopilot mode. And we experimented multiple things, and some definitely yielded us some good results, and some definitely failed. But whatever I think were looking promise, we really started spending more time to optimize further, and then we are here today, right? And with our little success story around it. And we are super excited to really share our journey, our learnings, our setup, our strategy, and our methodology with you and all our followers. With that, I'll pass it on to Shri to talk about himself as a quick intro, and then talk about our baby turtle Quants, right? So while we both are men, but we have a common baby, turtle Quants.
Hey, thanks, Sai. Thanks, and it's an absolute pleasure joining this show, Vivekji. We have been going through your the videos a lot, and then that also gave us a lot of inputs on how we build ourselves and enhanced our learning. So to introduce, it's in a very short way. I'm an engineer with an MBA. I've been in the consulting side for about close to 15-16 years now, and I started my stock market investment right from my college days. My dad used to send me money for buying spare parts for bike, and I go to the brokerage, sit and start trading there. And I still remember the cases like India Bulls, which I bought much earlier in the range when it was trading at 25-26 rupees, and that actually funded my MBA as well to a part. So wow. It has seen the ups. In the same case, we have 2008, 2009. It taught us a lot of learning for me, seeing the troughs. It's like the first time you get your lucky charm, then yes, and you become more confident, and then I started with investing, and then I've seen the other side as well. So as I mentioned, there is a lot of thinking that our experiences that have come together, what are our learnings in terms of how do you identify fall? In the last 1 year, I've been in Twitter, and I see a lot of questions coming up from people. Should I buy more? Should I hold it, or should I sell? What is the action that should I be taking? I have a good company. They say it's a good company. But am I entering it right? Am I making the right set of money? Enter it right, and then the rest market takes care of. That's been our understanding. So right. That is one of the part. And second, it's in 2019, I would say I got exposed to this book by Gregory Zuckerman, The Man Who Solved the Market. One of my favorite books. And that comes a quote, if you do a lot of trades, you just need to be right 51% of the time. Right. And that gives an incremental edge that will create wealth in a very big way. So that helped us to revitalize and structure TurtleQ in a much better shape, which is currently now, and we are still evolving. And this is about us. We are passionate about what we did in our job, and we also the first liner defines us. it's like you need a little push in your end to get things or move out of the comfort zone. And they always say that a newborn baby is not driven by or motivated by money. It's all about the curiosity to learn new things. So that pushes more and more. And that's how we got it shaped. TurtleQ got shaped. Like when we started, like Sai can watch for it, we never had the intention of taking it as a firm or an organization. It's all about us, our problems that we faced, and how we can build it as a solution for it. As he said, like our time is not in our control. Like many of our sell, like I miss the sell, I lose money. So that is partners and create something model that can actually give us a view or create a view that we don't actually not time bound or bound like or in the what to say struck by time. I put it. So this whole session we have put it in 4 different structure. One, we like what is our spark for TurtleQ and how we have evolved it. And second is how we built our setup based on relative strength. And what are output of our study. And we also have some interesting case studies why risk is managing risk is so important because that really helps us to help in capital production, and also it acts as a guardrail that we don't like when you accelerate, you need something to hold on. So that helps us in a much better way. If you could move on, Sai.
So before we go there, so Turtle Quant, the company which you have created, so is it providing quant-based services to investors, or it's your own proprietary capital which you have in that company?
We are SEBI registered research analyst,
Okay.
and we do offer our services. Like earlier, we were doing it privately, but since August 2021, we started offering it to public through small case. Like though we are offering it for a like we are literally giving out all our calls in the Twitter for about a year now. It's on the live platforms, but offering it through a small case through as TurtleQ brand from August 2021.
Okay. So guys, if you want to check them out, you know where to go. Again, clarification, I have no commercial interest. So do whatever you want to do. Go for it, guys.
Yeah,
Very
and
excited.
yeah, and we always say, always consult your financial advisor before making any decision. Don't just go by what we say. So, and it's like most people we say it's not that money that pushed. Yes, money is part of it, but it's all the passion to solve the problem that we had in hand. So, without wasting time, I'm moving in to explain what TurtleQ is all about, Ajit. We have 2 set of models. One is a momentum based strategy, and it typically goes with a theorem called, it's a base theorem called the law of large numbers. A very simple theorem that is used across in every set of trades. Like if you do a lot of trade, you only need to be 51% of the time. Like you need to be right 51% of the time. That gives a greater edge, and that with that we build this model. And law of large numbers says that over a period of time, the average returns that you get in each trade narrows down or goes to the closer to the expected value. That this has become based in a lot of this has applications in multiple stages. So I'm not going into touch into the theorem, but rather what we exactly how we evolved our TurtleQ into it. So our index is based on the broader indexes of Nifty 100, 250, 500, 750. And we don't look beyond 750. It is all the Nifty 750 index stocks that we look at. Our first layer is it's on the rate of change. And the second level filter is we get look for stocks that has the highest level of strength. And as a third level, we pick up some of the dark horses from this final list that has the highest potential to move on or to give us maximum growth. And India being kind of a market where news always follows the price. And what we have seen is like the last 1.5 years or 1 year where we are actively investing our money and also being live in the market. A lot of stocks that we have bought, it's always have been in that phase where we buy the stock and then the momentum follows suit. So getting it right is as important, and as much as like we also focus on the risk associated with it so that we don't miss out the boat. So this is about momentum, and that has been through offered as a more like a flagship product that has been currently offered through a small case. But for this session, it's more we talk something that is close to our heart, where we focus more on about relative strength. And because, as I said before, a lot of questions comes to us, like people asking, should I buy more, should I hold, or should I sell? There's a recent fiasco being the Tata Motors case, like it's been going up and up. It's 300, 350. Should I buy more? Should I buy more? Should I sell it, or should I hold it? Even in Twitter, I put some analysts like from some customers, like where they're asking every day saying that, can I sell it now? And how we do it, we create our universe based on fundamental screen. This fundamental screen can be based on individual industries. Some industries will have strong debt to equity ratio. Some industries ROC may not be applicable at all. So we create our universe from our universe, and then we apply some of the technicals. So we have given that all out what we use in the technicals in the subsequent slides. We can also see it in live. And from those technicals, we pick up or buy or enter the stocks when the strength is high, when we get the signal. And we keep on doing SIP as long the strength is positive. And the returns have been very phenomenal that we have seen and that we are getting as well, which we'll explain it in detail. And exit when the strength weakens. So we do cut our losses and our, So this is all about how we build our setup. And being this been a brainchild, a lot of part on Saidi's side, I leave this to Saidi to actually take it over.
Thanks, Shri. So I think this is the crux of the entire presentation, Vivek, right? So while obviously we take you through data and some of the real-time case studies on TradingView, but the logic around it, right? The context around it is, as Shri explained, we probably do the initial screening around the fundamentals, right? Since again, right, we are of the opinion that there is nothing called buy and forget, right? And we've seen a lot of case studies in last at least 8-10 years itself that buy and forget strategy will never work, right? You have to definitely keep an eye on it, and that's where your entry setup and exit setup are going to play an important role. At the same time, you definitely have to have a quality check of the companies, right? Even before you buying it. If it is a penny stock, if the shareholders or the promoters of the company are, lack of integrity, obviously, right, within a week's time, one bad news, you can't imagine, right? One probably blackout, your entire capital is gone. So I think this screen really helps us create that university of good quality stocks. And then it doesn't mean that if the company has very good fundamentals, the company is going to give you good returns, right? And the classic example, and everyone's favorite, ITC, right? And on the fundamentals front, no one can question ITC, right? Humongous cash flows, right? Undervalued as compared to their peer group in the FMCG space. If we call that as an FMCG, while most of the revenue come from the cigarette spectrum, though, but if the stock is not moving, if I deployed my capital there, if my capital is not appreciating, company being great, good, having great fundamentals probably doesn't help, right? And that's where I need, yes, the company has to be good, but at the same time, I need a good price action also, because price action is what really makes my money moving, right? And that's where I will, apply the technical indicators to really gauge the strength of the stock from the price action perspective. And whenever I see that all of these parameters are met, then that actually gives me the entry signal, right? And likewise, if these parameters, the exit parameters are met, it means this determines that the stock is no longer strong, the stock has become weak, and I think the price action is weak. It probably might not go further up, and that is a time probably we will exit. Does it mean that once you exit, the stock will never go up? The answer is this is a setup. Yes, every setup has its own advantages and disadvantages, but there has to be a method to the madness. Yeah. Now I'll probably get into more specific in terms of what these signals are, right? And the first and foremost thing is the relative strength, right? While we read a lot of white papers around it, but again, I'll take our experience back from our corporate life, right? And at one point in time in my career, I used to manage a team of 250 people. Okay. And when I had to do the performance management for them at the end of each performance cycle, right? And it's always about the relative comparison, who has done better than the others, right? And so when I do that, for my own people, right? And to reward them appropriately. The same logic goes in the stock market also. Which stock is really doing better than the other stocks? Which stock can give better returns than the other stock? And that's where the relative strength comes into picture. And when it has been so powerful in the corporate world to really manage the performance of the human capital, and that's the most powerful resource for any organization to run, why can't it be kind of applied in the stock market as well, right? And that's the first point. And the parameters that we look at here are two, right? And one is the 52-week, and we take rolling 52-week strength of the stock as compared to the broader index, which is Nifty 50. And we also take 13-week, which is to really calculate the recent strength, right? The short-term strength is 13-week and long-term strength is about 52-week, right? So that if both the short-term and long-term, the stock has the strength as compared to the broader index, it means that I think this is the time for you to pick up the stock. But does it alone solve for it? Probably not, because there could be other attributes, because at times there could be a false signals, right? That's when we look at ADX as an example, right? And ADX actually determines the strength of the trend. Yes, stock is moving up. Stock is actually now started to outperform the index, but is it kind of validated by the ADX from the strength of the trend perspective? That's the validation that we do. And volume is another aspect that we take. Last 13-week moving average, is volume building up? It means that there is a lot of interest, and there is a lot of action in terms of price and volume around it. And moving average, super trend and RSI, obviously, while relative strength talks about the stock performance as compared to the broader index, RSI talks about the stock itself, right? The strength of the stock itself, right? And we look at 55 as the entry signal, and we had done multiple simulations that we kind of in our algorithm we tested with 55, 56, 60, 65 and everything, right? And we realized that I think 55 is the optimal setup for us, and likewise super trend 10-3 again there. The 8-year being 3, again we tested with 1, 1.5, 2, 2.5. I mean, we did a lot of mathematical simulation around it, and to really find which is the optimal one. Because if I go with super 10 and 1, probably I get a lot of signals, right? I have to exit many times, because one bad news probably, or let's say now whatever is going on, right, in the market the last 2 weeks, right? And be it the Fed news, be it the new variant news, whatever it is, right? And if the stock comes down by, let's say, 10-15%, then you get an exit, but probably the strength has not weakened. It still may have the potential to go up. That's the reason I think we kind of looked into all these different parameters, and we optimized, and we arrived at these being the optimal parameters for our setup. We're not suggesting that these are the optimal parameters, but these parameters work the best as per our setup, as per our risk appetite, as per our goals, right? So that's what we're saying. And likewise, I mean, on the similar lines, the exit criteria as well, it is 52-week. We look for, again, both long-term and short-term relative strength as compared to the broader index. RSI, we look at less than 45, super trend remains the same, ADX remains the same, and moving average remains the same. So this is what our setup is, and I'll take a pause to see if you have any questions before I get into the data, right? And if this is a setup, what our data says.
Sorry. So yeah, question. So 2-3 questions.
Please.
In fact, this looks similar to me. This look quite similar, so it's easier for me to ask questions. So I see that you're looking at relative strength 52 weeks and 13 weeks. Now, what's the logic of 13? Is it again more of optimization which you have done and you found 13 to be better?
Correct. So as an example, if I take I take an example of, let's say, Deepak Nitrate, right? And I can open the chart and show you as the discussion progresses. So the relative strength probably could have been at 1. It means the stock has performed 100 times better than the index.
Yeah.
But last 1 month the stock has corrected. It almost reached 3,000 and came back to 2,100.
Yeah.
Now the relative strength is hovering around at 0 to 0.5, which is my buying zone. But should I buy it or not? That is where my 13-week moving average helps me. 13-week moving average tells me that last few weeks it started correcting. If you're holding it, it's not an exit for you. But is it the right time for you to enter? The answer is no. Probably you need to really see whether the short-term momentum gains again. And that's when you probably pick it up. If it further goes down because of any other reasons, right? Because of higher valuations, whatever it is, probably whatever that, the position that you have, you book that out and then you exit. So that's where your 13-week moving average helps you stay the course and identify the right opportunities, even considering the recent performance of the stock.
Sure, sure. One more question. Sai, we have seen that a strategy which works at this moment, eventually after a point of time will not work. Because the whole market microstructure changes, and it's not that because many people are copying the strategy, that's why it's not working, but it's actually the market is changing every 2 to 3 years. So this strategy which you are showing right now, you have been following this, and obviously before that probably you had some other version of this strategy, and probably you have evolved into this strategy. How frequently you change or revisit a strategy or add something or deduct something or change the parameters in a strategy?
So I think for last few years, definitely we had not changed the strategy because of the fact that you're right, right? Uh, every strategy, I mean, in fact, no strategy will assure you 100% guarantee, right? And every strategy has its own pitfalls. We are of the opinion that I think there are two aspects to it, right? And we are of the opinion that point one, if you keep looking to optimize your strategy every now and
Yeah.
then you don't have a strategy, right? So
Okay.
you're bound to fail, right?
Okay.
But at the same time, if you don't consider the market dynamics and if you probably blindly stick to your strategy forever, then also you're bound to fail, right? I think there is a thin layer, right? And you can't be absolutely static and you can't be too dynamic also, changing your strategy every month or every week. Now example, the Nifty has rallied from 15,000 to 18,000 just like that. Boom. Then it fell down, right? And if we started believing that our strategy is really working wonderful when it was going up, but when it started coming down, if we start questioning our strategy and then fine tuning it, then it's not working. Probably you really need to give it a time to really take through a proper good cycle, be it a bull or bear phase, then see if there is an opportunity for you to optimize it. But behind the scene, you can still continue to do your work, but bringing that into the application for every 5% correction, 10% correction, I don't think that's the right way. At least that's our point of view.
Sure,
and one point to add here is that we also focus on the fundamentals of the company. So in our universe, we try to have a good churn. Like when we say churn, like there will be new companies coming in. So how we bring them on board in our universe, and then how we see them growing. So we create like 2-3 lists that works as more like an see how they move around, and then parallelly we look at the strategy. Let's say and our backtest data also comes to an help to an extent. So how the strategy has performed, like we try to do some part of testing, go back and see, is it like still working in different set of scenarios? So that way it helps to shape us a better. But as I said, like we don't do it as much as like more frequently. Yeah.
Sure.
I will in fact show you the data, right? That probably answers and gives you a bit of more comfort. With that, I'll move on to the next slide.
Yeah.
And this is an interesting slide, Vivek, right? So this is where our let me just move this bit. Sorry. Yeah. So we had done this. We had done an extensive testing, right? While this is not a new strategy, this has been in use for a while, but even before we started deploying our money, we kind of tested this thoroughly, right? And as you see, and I'll probably spend time on weekly time frame, and then I'll move on to the daily time frame also, because we kind of tested the same parameters on both the time frames. Okay, we tested this on around 400 stocks, and again, as I said, we run our fundamental screens to really create our own universe, and we kind of picked about 400 stocks to test the strategy, and we tested this for last 20 years, right? And to answer your question, last 20 years, obviously the market had been through different cycles, right? And how the strategy would have worked, had this been in place, right? Probably when I was out of my college, if I started using this capital, this strategy, how probably my capital would have appreciated. And with that intent, we just went back and then started looking at it, right? And if you see, it gave me about 919 signals, right? The buy signals. And again, this is not for intraday, this is pure position cash trades, right? And it's a weekly time frame, obviously. So signal meaning obviously it's a long, it's a buy. And of which 75% of my signals, yielded positive returns, right? Which is phenomenal, right? In my opinion. Now, the interesting fact is that the average holding period is about 3.5 years, 43 months, with an average returns of 6.8x. Okay. Now, yes, there is a maximum win and minimum loss. And again, this could be the outliers. I'll open the actual data and then show stock by stock, based on your interest. But the interesting call-out are the below two highlighted sections, right? The green and the gray one, right? The relative strength, the fundamental rule is write the winners and cut the losers, right? And that's what the data also tells me, right? And while my average holding period of 919 signals is 43, but if I only take a subset of that, which are my win trades, my average holding period goes up to 51 months, right? It means if the trade is in my favor, right? If the setup is working in my working at my advantage, then my holding period goes up significantly. So as my returns. But at the same time, this can give 25% false signals, right? In those events, my holding period is as minimal as 16 months, right? It is 1/3 of the time. It means that you realize that you exit early, so you actually kind of minimize your opportunity cost. You probably deploy that capital elsewhere so that you just get it moving, right? And if you see the average loss also, which is about 30%, right? So if the trade is in your favor, you don't need to worry about it, right? You don't need to really keep it capped that okay, I will exit at 30% returns, 40% return. Just let it run, right? Till the time you see the strength, just let it run. But if the stock doesn't show the promise, doesn't show the kind of performance, if doesn't show the strength, then you find it early in the game, exit early, book the losses, right? You need to be ruthless in booking the losses if the stock is not in your favor, right? And that's where I think these are the two data points which are extremely critical from the relative strength perspective, right? And while we tested this on the daily time frame, results are not bad. But I think personally, considering our time that we invest, considering the amount of time that we want to spend, that being very minimal, I think we personally prefer weekly time frame, because even the data also says that weekly time frame gives you the better returns, because let's say during the week there could be news, and that news probably would have pulled the stock down. But next day the news calms down and then stock started to perform again, right? So your intra-week nuances, news-based fluctuations can definitely be avoided. Thereby, you would probably eliminate some of the false signals if you go with the weekly time frame. But again, daily time frame, the results are not bad though, right? So this is what our data. I think this answers some part of your question which you'd asked, right? If the stock, if the market undergoes different cycles, how this setup would work, right? So
sure, yeah, great.
So with that, and again, this is the similar data, but in a different view. And as you see here, this is the scatter plot that we've drawn here. This clearly explains the equity curve, right? And the longer the period, and I kept it for 60 months because there are stocks where the exit came or exit did not come also even after 15, 16 years. I'll show you those examples, right? But again, given the space limit that we had, we kind of kept 60 months as a limit. And if you see the equity curve definitely goes up as the holding period goes up, right? And the stocks which you will incur losses, which is below this line, gray line, Vivekji, the amount of stocks will come down significantly because you would have exited most of your losers early in the game itself, right? And you'll only hold on to the winners, and those winners, would actually give you the great returns. And it's all, again, at the end of the day, it's all probability. So, but you have to have some method to the madness. So that's what this is all about. And this table also explain that your win percentage is definitely less because this is the time where you'll realize that I think your decision was wrong or your setup has gone wrong. You'll exit. But your system doesn't give you the exit signal for more than 3 years, 4 years, and you see that you won't lose money, right? 85%, 94% at year 5 onwards, all your trades give you the positive returns,
Sure.
right? But who determines this holding period of 5 years? I will not determine. My setup tells me, right? Yeah, hold it. You hold it. You hold it. You don't need to exit. I hold it. Yeah.
I can resonate this with my own personal performance. This is pretty much what it is for all relative strength practitioners.
I'm glad, and that gives us a lot of confidence that we're in the right direction. Okay, so yeah. Any further questions before we move on to the next one?
No, I think we can continue. Yeah.
Thank you. And Shri, would you want to pick this up?
Yeah, I'll do that. So again, in continuation of what we saw in the earlier slides, Vivekji, and this gives me year-on-year performance of my stocks. Like in any relative strength that we talk about, it is not that relative strength is expected to move up faster than the index, but also fall lesser or help to cut our losses much better than the index. So that's where this slides or this our analysis talks about. If you could look at specific years like 2006 and 7, the number of wins have come down significantly, because mainly on the subsequent 2008 and 9 years, for example, when you enter a stock and then the holding period, if you look at it's about 20, 25 to 40 months. And towards 2008 and 9, when the market started going down, this has really helped us to exit some of or book some losses or exit those stocks in a much early stage than it used to be. So all the 16 months or average that we saw in the earlier slide, which we got as an average, is we are trying at the year level, but year on year, how much is my method or strategy is working. And typically the same scenario can be applied for 2016 and 17, where there is a lot of volatility in the market. There is a small cap and mid cap stocks didn't move as we expected it between 2018 and 19. And we can see that the number of trades versus the number of losses that's been cut is a bit higher in those years. And similarly, when it comes to 2019, again, that's where we got our 2020 shock. And there are also, we cut some of our losses in a much better way. And that helps to, it gives opportunity to redeploy the capital one. Second, and gives us more time to stay in the market. So,
sure.
And we can actually go into, again, some of the case studies here. Like before we move to live, we open up TradingView and then we can show it on live. Some examples like, what if like this have been like, we are seeing in TurtleQ, what if we are holding this stock from this year? Like Titan is one example. We got our entry signal as early as in 2002, and we have not got an exit signal in our weekly chart yet. So if someone is holding it, yes, the returns would have been something like 970x or 980x. But this is more to demonstrate that there is no exit that we have got. Moving on to the next. Again, it's about riding the winners. Ajanta Farm is one. We got our entry as early in 2003. We got our exits somewhere close to about 2018, mid of 2018. And if you can see that the stock has fallen down from there, like from 1,300 plus or 1,400 levels, it came down to about 900, 800. And that helps to cut our losses in this period, like 2 years, and then it's coming down by 50%. That this model helps to act as a guardrail here. Second, we got our second entry in 1369 and still a hold from there.
Okay. Vivek, you can probably, refer to this section for the price where I'm highlighting, right? And this is actually what our strategy says. And the initial buy was at 9 rupees and then exit was at 14.20. And the second time entry was, lesser than the first time exit. It means, one, I think you get to re-enter the same stock at a lesser price. And during this period of 2 years, right, you probably would have leveraged your capital elsewhere, right? And actually it works in your favor in multiple ways, right? So, and yes, I think these are great stories, right? And one can definitely come and challenge us that we don't need relative strength to invest in Titan. We don't need relative strength to invest in Asian Paints, Pidilite kind of stocks, right? But the market is not full of Titans, not full of Asian Paints, not full of Pidilites, right? And the market has, the different set of stocks. And now we're going to show you those examples as well, right? And where this setup, I'm not saying this setup, but having a setup is extremely important, right? And probably we're not saying that this is the only setup that you should go with, but you have to have a method. You have to have a setup for yourself. Why it is important to manage the risk effectively? We're going to show some case studies on the slide, and then we'll get into the actual trading views. Yeah, what do you see?
And another classic case study is Vivek ji is everyone's favorite. Like we can look at ITC. So if you can move on. Yeah. So this ITC, if you can look at Vivekji, our first entry came in about 97. Again, it's a backtested data, and the exit came as good as in 2000, early mid of 2000s. And again, the stock fell down about, let's say, 20-30% here. We got our re-entry in 2001 with a buy price of 20 and got our exits. So we may not be looking at the peaks, we may not be cutting out or encashing the peaks, but rather this really helps us in terms of cutting out the right exits. Like we don't hold a stock that goes, like when it goes into a downtrend, this model really helps us to sustain or exit much earlier. So that helps us to protect our capital. And the third entry, if you can see, we got it around 2008, which was around 72. And we got our exit as early as mid of 2019 when the stock was at 238. And from there, we still haven't got our buy signal yet, though the stock is almost trading at the same price range. And while it moved all the way down to 140 and it came back to 220 plus. This is on how we play around the strength and the weakness. And what you see is a very classic case. And I used to poke this guy every time, like when we talk. This is one of his favorite stock where he has lost a lot of money. So you can see.
You use the right word, one off, right? So I heard many have such diamonds in my portfolio.
Yeah, so like we can talk about. So like if you could see the exit seed, our first exit came in somewhere in 2009, but you can see that after 2009, like out mid of 2009, the stock fell almost like close to 90% of its value, came almost to about 3 or 2 rupees or less than 6 rupees. And we got a second buy at 32, and then we exit at 51. Again, we may not be catching the peaks or the troughs, but we just play in between. That helps us to sustain. And like it's not always over performing or over promising, but definitely it's not underperforming. So that way it helps us to sustain. The third entry, yes, we got it in mid of 2014, and you can see that we got our exit way back in 2018. After that, we can see that drastic fall, and I think Sai has sailed all this along. And
I have one question here, which I'm
yeah.
also frequently facing, and a lot of my RS followers also face this, and they face internal trouble because of this.
Hmm.
You see, you're spying that 2009 when you entered,
Yeah.
and when you exited in 2014, just before 2014, I guess it's turned 13, it made a high of 120, around
Correct.
110, 120.
Yes.
But you were not able to exit there.
Yes.
Right?
Correct.
But the price went down, and because price went down, your signal, your system suggested that it should be sold, which is the toughest decision.
Correct.
Yet people want to deny this, that no, it will come back there. And your, sorry to interrupt in the middle, so your return actually has gone down, which is kind of a not acceptable to a normal person. Now you say.
I answer that, Shri, right?
Yeah,
and you can chime in. So I think, Vivek, I think, I don't know if I can use a word, greed, right? If you have that greedy mindset, right, that's where you tend to lose money. That's exactly the point that we're trying to make here, right? Here also, if you see 137 to 236, approximately 70% returns. If you're not happy with the 70% returns, right, and you would have actually seen 12 rupees now. But if you're worried about why have I not got exited at this price, right? When it hit 340, 350, why did I get an exit at 230? If I had exited here, probably I would have made 3x money. Who knows, right? This probably, when this was coming here, probably it could have taken support here and then started going up like what we saw in Pidilite, what we saw in Titan, which has never given the exit. Then probably the stock today would have been at 2,000 rupees, 3,000 rupees. No one knows, right? But that's the kind of space that you need to give the stock to perform, right? And you can't expect the stock to go every time and you get the exit only at the peak, right? And if anyone has that expectation, my opinion, I'm sorry to say this, but probably that's the extremely unrealistic expectation from the market, and those are the people who tend to lose the money, right? And you play between, right? You don't need to do the bottom fishing, and you don't need to really find the top to exit. You just play between, you still make humongous wealth, right? It's all about containment. It's all about understanding the dynamics here. And that's why I would probably say Vivek. And Shri, if you want to add anything on to that.
No, like again, like as Vivek ji, as you mentioned, like we have experienced this as well. Like as you rightly pointed out, people get like, let's say I've seen 340, but I could, if I had exited, yes, my returns would have been made. But again, sustaining that in real time, again, it's about how we see it and how we get the behavior in executing. Like, should I? Again, this goes back to the earlier question: should I buy more or should I hold? So as long as this model works, is that like as long as we get our exit signal, we can continue to buy in dips, or we can continue to hold the stocks. So that way, it helps me to increase my like wealth, my accumulation increases, and also towards when I get the exit, like I don't look at how much this I could have made, but rather I look at how much I have made.
I'll probably take another 1 minute if you're okay with Vivek, and I'll just take this example, right? And you see Titan, while we're saying that this is a consistent compounder and gave about 970x returns, it doesn't mean that every week and every month this has only gone up, right? And you see here, this also has seen from 60 rupees, it came down to 30 or 35, approximately 50% drawdown that you saw here, notional drawdown, I may say. But if you look at the period where it saw the drawdown, it was 2008 correction. So what it explains is that, but why you did not get the exit? Stock fell, but stock fell lesser than the index, right? And that's the reason that we said, relative strength doesn't mean that the stock will always go up. Relative strength means the stock goes up when the market is in your favor, and stock comes down, but comes down less as compared to the broader index. That's when you see that, you say that the stock has a strength. This is a classic example of Titan. When the market corrected, it corrected less. Hence, I did not get the exit. And when market started going up, and you see how fast it ran. And this is where I saw the notional drawdown. Second, here is a phase where I have the consolidation also, right? Stock did not move up. But since I look for last 52-week rolling returns, right, as compared to the broader index, probably this was a time where the market also probably was in the consolidation phase, right? Probably did not move up, that much. And when the market is not moving up, if my stock is not moving up, but moving slightly ahead of the market, but not coming down, still it's a hold for me, right? And probably I would not find a better opportunity than the existing one. The problem is that, we always look for the multi-baggers, but we always, tend to forget the existing stocks, which are really giving you the better returns with a proper approach. And this is a classic example. You see a consolidation here, you see a notional drawdown here, but still it gave you 970x. S-Bank could have been the same situation, right? Probably who would have imagined after 212, if we did not get the exit, this would probably have rallied like this only. But since it did not rally, since it became much weaker, you had to exit. If you did not exit there, today you're sitting at 12 rupees.
Sure. So I mean, obviously I also practice this, so I have a different answer to this question. I have asked you this question, but I have the answer to this question, and I want the learners to understand this point. It's so important point, and people do make that mistake that, sir, this stock is relatively strong, but I had to exit earlier. I call it, ultimately it's a bell curve, right? Relative strength is, it's like this bell curve. It's so tilted towards stock which becomes a favorable stock. Most of these stocks, Yes Bank and others, etc., which it's very difficult to say, they will probably be here. But because Titan will give you this return, your probability of overall return goes up because you'll see very less stock here, very
Yeah.
few stocks here. And
Correct.
here you will see few stocks who will really uplift your return.
Mm.
And Yes Banks of the world or Vodafone and other, which will give you frequent buying and selling, they will probably give you an average return.
Correct.
Absolutely. Yeah.
So, and we don't know which one will become Titan.
Correct.
So
Yeah.
we will have to have positions in all these stocks to remain in the
Correct.
game.
Correct. Stay invested is the only option we have with a
And
method.
also the right portfolio like that we have, like when we have about a pool, so then it becomes easier on like rather than looking at individual stocks, like we as an like we mature to look at the portfolio level, and then the overall returns, like then the individual trades really doesn't help like matter, but rather the overall return that gauges.
Sure. So how many stocks typically should be there as part of the portfolio?
So
We both have different
I,
answers for that. For that,
yeah, yeah. So I mean, we both have a different approaches to that, right? So Shri is extremely concentrated, right? So he always keeps his portfolio in a single day, right? I am not too diversified, but I always prefer to keep, in the range of 15 to 18 stocks in my portfolio, Vivek,
Okay.
right? So that gives me some comfort because, again, right? Again, each one has different opinion about it, right? So I'm not saying that this is the right approach again, because my partner itself is going to probably uh, give me a tough debate on this. But my personal belief is that, that gives me comfort in terms of capital protection. If I probably keep, 15 to 18 stocks, my per stock allocation is going to be about 6 to 7%. So that actually gives me some comfort. But even if, couple of trades, a few trades go against me, right, in terms of protecting my overall capital.
Okay, got it. So I did a face-to-face with Gautam Baid. It was more on investing, which I
mm,
released last Friday, and he showed an empirical study where it is mentioned that in a portfolio, the most ideal size of a portfolio is between 20 and 25. And
okay.
anything beyond that doesn't add value to your return because that's too much diversification. And this is
Sure.
a science study which was done in US. I think 15 to 20 is a good number, Sai, because even I try to keep my position around 15 to 20 stocks. And whenever I have seen that whenever my position goes up to 25, 30, I know there is something wrong with the market. Because if
Mm,
market is giving me too many stocks, which is taking my position to 30, that means it's a trap for me.
Yeah, I personally have never gone beyond 18 because even if I get opportunities, I probably just add more capital to my existing holdings, right?
Right.
If I have capital, rather just finding a new opportunity, right? So because if you have a system in place, if you have a setup in place, if the logic runs the same on all the stocks,
That
right?
makes
And
sense.
if right, so that's my fundamental belief, Vivek.
Sure, sure.
Sure.
Let's continue.
yeah. So another classic case here, Vivekji. It's like this is one of my favorite stocks as well, and we see Vodafone idea. The last exit that if you could see, we got it somewhere in mid of or early 2018, and from there the stock has like taken its beat. And though it has seen a peak of like 120 130, like we got a like you can see the time difference between the buy and the exit, a very shorter buy and exit. But yes, we if we go by the book, yes, and this would have saved a huge fall. And interestingly, this stock has given a buy in our daily charts, like in our daily trade. This has given a buy in the range of 12. And yeah, but it's like it's a good stock that I love to play around, and it's given a good set of returns as well. But you can see that like where we cut our losses at much earlier stage. The last piece we have taken a loss. It's about 28% loss. Yes, but it will save us the huge fall.
So why we kept this case study, Vivek, is that all the scenarios where you saw long, I mean maximum scenarios where it gave us a positive returns doesn't mean that the setup works for all the stocks. It
It's
can give
not
the
a
negative
rosy.
return.
It's not a rosy book.
Yeah, it can give the negative returns, but the interesting catch is that the positive returns versus negative returns, the delta is the catch, right?
Sure,
Here
sure,
so that's what we wanted to just convey, right? So
sure.
so
I'm
with
very,
this, yeah,
I'm
please.
curious to see the latest chart of Vodafone because my system has given buy call
Yeah,
already.
we got a buy in a daily call in like in end of September.
Yeah, I'm
Oh,
I'm opening that now I'll go with the
Yeah,
daily
we
time
start with
frame.
Vodafone.
Yeah.
Yeah,
So this gave us the buy signal here, Vivekji, which is at
hmm.
in
16th
September.
September.
Yeah. So this is where it gave me the latest buy, right? But again, as I said, we go with the weekly time frame unless we really find some swing trade opportunities on the daily time frame. We always prefer weekly. And you see, sorry, 19th September, 12 rupees is when it gave the exit. Sorry, buy
Entry.
entry signal.
And weekly?
Weekly, we
Uh,
are ready to get a buy there. We are still
no,
like weekly will come.
weekly. This was the exit, and after that, there is no buy yet.
No yet.
Your
And
TQ indicator is just gone above zero.
yeah, it has
Yes.
just gone above zero. But as I said, right, there are other variables like RSI being greater than 45, my ADX, my super trend, volumes, right? All of these takes into
Oh,
account.
all these you have not embedded as part of this indicator, TQ?
Correct. Yes, that's
This
exactly
all
what we're
is
going to. that's exactly what we're going to take you through. So these are my variables, right? And this is how we kind of build my setup. And I have a indicator and as well as a strategy to test my back study. My long-term RSI is 52, and my long-term RSI exit is minus 0.25. Here is something that I wanted to really talk about, right? So, I mean, I'm a fan of your videos. Your daily 45 and super trend is a powerful tool, right? But you prefer when RSI goes less than 0. But when we kind of did the optimization, we realized that on a weekly time frame, instead keeping it less than 0, if you keep some more cushion, which is minus 0.25, which is 25% underperformance as compared to the index, right? Your holding period is significantly longer, and you would probably eliminate some of the false signals. And that's the optimization that we had done. Here instead 0, it is minus 0.25, and my short term is 13. Super trend indicators variables here. And RSI also another interesting fact, right? While usually widely RSI being used for 14 days or 14 weeks look back period, but when we tested, I think 21 is working better for our model versus 14, right? That's the reason for all these variables we kind of done a lot of simulation to find what works better for us. And instead 14, it gave 21 works better in our favor. And RSI entry 55 and 45, ADX was 20. And this is DMI again to determine the strength of the ADX, and moving average, both price and volume, we go with 13 week, right? 13 being the Fibonacci number, and we prefer that. So these are the variables on which our indicator is built. Now, another interesting thing that I'll talk about, Vivek, is an example. Let's say if I say APL Apollo, this is right here, right?
It's on the top.
Yeah. So if you see the current relative strength, let's say here in at this point in time, 2.39, right? Should I buy it here? So is the question. Our setup always says that if your relative strength is between 0 to 0.5, that is when 0.5. That is when you try to enter the trade. The reason being your exit is minus 0.25. It means if the stock started to underperform, so the scope that you're leaving for incurring a loss is minimal. If you buy it here, then it has to come all the way from 2.23 to 0 and then 0 to minus 0.25. It means the stock has to correct a lot for you to get an exit. It means you would have actually incurred more loss, right? So while this setup is great, but you also need to understand how to use this setup. And that's the reason we kept some kind of thresholds when to enter, right? And yes, definitely 2.39 is that indicates that stock has a lot of strength, but is the right time to enter? The answer is no. I would rather enter it here. If I missed here, then I would wait for the opportunities. When it comes to, again, 0 to 0.5 range, that is when I probably buy it again, right? Deepak Knight, please.
Yes. No, I have a question with this talk. Now, let's go to Apollo. This is where I want more understanding and people lose their nerve. Is even you have highlighted, see, you entered here.
That's exactly the reason why I highlighted. I wanted to drive that conversation. That's the reason I highlighted. Please go on.
How do we, I mean, people have this problem. See, we all are mature people. We understand, we know the psychology part of market that sure we have to hold in because the stock is still strong. But a normal person, they just lose it. When the stock goes down by 10%, you will get so many calls, messages, sir, what do we do? What do we do? How do you manage this fall, which can happen because of some reason which is not in your control?
Correct. So my answer to that, probably I would give in two to three fold answer, Viveki. One, I'll start with the fundamentals, right? While my entire setup is on technicals, but as I said, our first filtration is on fundamentals, right? If fundamentally the company has not done anything wrong, right? It is the nature of the market, and market itself is in a correction mode. Hence, your stock is correcting. Trusting your fundamentals, you should hold on to it. It doesn't mean that you will hold on to it blindly, but again, follow your setup, right? That's one layer. Second aspect to that is that, yes, one definitely, whoever is, entering into this space, right? One definitely have to have an expectation that the stocks will always go 2 steps forward and 1 step backward. It is not that, it will always go, forward. And then obviously each one of us would have been, right? Millionaires or billionaires by now, right? So that's the nature of the market that one has to understand. Third, if probably they cannot hold their nerves, there are, I mean, with this setup, relative strength setup, there are different methods that are out there in the market, right? This is not the only way. I think one has to really identify what is their risk appetite, what really meets their goals, and what really helps them with a proper sleep in the night. That's the most important thing, right? And they should adapt that methodology. To me, it works the best, right? Because this helps me understand how my stock is performing as compared to the broader index. Even if my stock is corrected by 30%, if the market is corrected by 35%, it means my stock is performing better. I will not see that as a 30% drawdown. I'll see that as a 5% gain because my stock has corrected 5% lesser than the market. It's all about how you interpret the data, how you interpret your, the journey, right? And it suits my style of investing. It suits my style of risk management. It doesn't mean that it suits for everyone. I think one has to really find what works for them and then adopt that.
Just to add that, like me and Sai, we are both totally contradictory when it comes to our style of investments. Like when I'm confident, I go all in. So this, I see like this kind of a dip, it comes in if the stock is good, and actually this is an opportunity for me to strengthen my position. So like I may not be doing it like all the way till like 50%, yes, but I'll do at least in stages, in parts. That gives me a very good leverage when it comes to growth happens. So that way it really helps us. There are a very similar example like where we have also gone wrong, like some of our learnings that we talked much earlier, Vivekji. Sai, we could actually pick JCAR is one of my favorites actually.
Here you go.
And you could go all the way to 2008.
What a story it was in 2008. Madness.
Yes. I had this stock got at 2022.
He bought it here. He exited here. So
seriously.
Yes, and every time I really get interested when in Twitter when people talking that JCorp is a very good buy at 130. It's like, guys, you should have seen it in 2008, 2009 how this performed. Yeah. So, and yes, these are some of our learnings. Deep. Like you start with so much confidence, we go at 20, and then it goes to 1,000, and then it came all the way to 60. But still, I made money out of it. But in case, like, if somebody is like really on the mindset to say it's going to be 1,000 is going to be my pick, then I could have lost my sleep there.
Sure.
Even if you take Cipla as an example, Vivek, right? It's not a high beta stock, right? And it actually grows very gradually. And here, if you see, again, I'll probably open this, and you can see it here also, right? My entry came at around at 270, and I got the exit here at 465. I still made good money, right? It's a 2x return, right, from here to here. And if I did not have a setup here, and if I had not exited here probably, and you see from here to here, it's, again, to get to the same price, it took almost 2016 to 2020, right? 4 years. My capital would have been stuck here, right? Instead, I would have leveraged the capital elsewhere where I find a better opportunity, right? And is Cipla a bad company? The answer is no. Cipla is not a bad company. And we saw the ITC also as a classic example. I see ITC fundamentally is not a bad company, but if there is no price action, if my capital is not appreciating, then I definitely need to look for better opportunities.
Yeah,
I'll just remove this off so that and this is where my entry was. The latest entry was in 2008, and I got the exit here. And after that,
you can zoom out a bit, so we have a full view. Zoom out.
Yeah, you can see it here.
It's okay.
From here, and you can see that this yellow is getting converted into green. That's where my entry signal is on the indicator. And whenever it gets changed to green, it actually, in a way, it's my pyramiding opportunity, right? Let's say if I had taken the position here, if I use my indicator, if I had entered here, taken my first position here, every time it shows green, that's an opportunity for me to add more, right? It is actually giving me multiple signals, so I can actually kind of do a pyramiding, right? Probably add more to your winners, and when it goes against you, then probably you'll exit. So that's how we use the indicator, right? So every time it changes to green. So the yellow indicates no action. Whatever is the position, you just stick to the position. If it is green, then either you buy now, or if you already hold the position, add more to it. If it is red, then you exit, and you see the red here. Eyes closed, you exit.
Got it.
Yeah. So I mean, we can open any of your stocks, any of your preferences. We can probably show how it works. I mean, that's absolutely fine. I know we're on top of the hour, but if you wish to probably look for fewer
Let's see
examples.
Bharti. Let's see Bharti. I like the list which you already have. Let's see Bharti.
Yeah. Yeah. Bharati is in consolidation.
Hmm.
And if I probably open this here.
Just one thing, Sai, before we'll edit this one. Just clarify, will this indicator be available for people or it's a private indicator?
Currently, it is a private one. We've not kind of made it available for public, Vivekji. But yeah, I think if
But we'll be doing it shortly, Vivekji. Like only thing is we are just trying out like multiple iterations, not just weekly and daily. We also had a look at monthly, and also as we said earlier, like how this can be replicated across markets is one thing that we are looking at as well. But definitely this will go on.
So should I not? Then I'll not talk about it because people will ask this question that how do we get access to this indicator?
I mean, we can make it available for public. I mean, that will not be a problem. But
Yes.
again, right, if someone comes back voluntarily and asks for it, I mean, we can definitely answer that often. That's absolutely
Sure,
fine. We are
sure,
flexible. Yeah.
sure.
Yeah. And here is another classic case, Vivek, right? You see, when it goes in your favor, you hold it, and 16x returns. When it doesn't go in your favor, you book minimal loss and you exit. Right, 17%, 17% versus 16x, right? And this is another classic example. And it's been in range bound for long. And probably this is where probably the indicator must have thought that I think it is gaining the strength. You buy it now, but again, it went back to the range bound and then sideways, and then it did not move up. And thereby you get an early exit with 17%, 14% loss. The recent buy signal was at 361, currently at 718, approximately 2x returns in about in about 2 years time.
Sure, got it. Got your point.
You can also touch on Sundaram Clayton if you would like.
And everyone is talking about renewable energies now, right? And if you see this is another classic example, right? And my entry signal for renewable energies, right? And it got at 235. The current stock is it. And again, when it is exactly a year ago, December last year, and we are December first week now, right? Not even exactly 1 year, probably a few weeks less than a year. 235 to 590. I know again, last 1 year it's been an outlier, right? So you can't really draw any conclusion based on last 1 year's performance, but just as an example, I'm just taking this right? And Sundaram Clayton is not very highly spoken stock in the market, right? And usually not a lot of buzz that you see around Sundaram Clayton. But if you see the returns of this stock also, right? If you find the right company, right, you don't need to really worry about whether this is spoken highly in the social media. A lot of people are really commenting about it, hence I go for it. No, I mean, there are a lot of hidden gems, right? You just need to identify those at
Most
the
of the
right time.
time, big money is made when people are not talking about it.
Correct.
True. Very true.
Right. And you see this, right? 375 was the entry and exit was at 4046, 4042. An interesting thing is that my second entry was almost 30% lesser than my first entry, right? And 4,000, and my second entry was at 2651. Currently it's at 4297. Right? And you would have actually avoided the complete pain from here, 2018 to 2021. These 3 years pain you have avoided, and if you want to really re-enter, yes, it gave you another opportunity to buy it at 30% discount. And during the 3 years period, you would have leveraged your capital elsewhere, right? So it's a multiple advantage.
Sure, got your point. So tell me, this is a weekly chart, and your signal generation is happening any time of in the weekday, or it's typically happens on
Any time of
Saturday?
the week.
Any time of the week, any time of the weekday, but we wait for the weekend.
Wait for the weekend to close for any any noise that we cut off the noise, and then our positions are taken mostly on the early of next week.
Oh, so you take mostly on Monday.
Monday.
I can presume that.
Yeah, Monday first hour or Friday last hour, right? So depending upon the time that we have at hand. But we always look for the closing of the weekly candle, right? So to avoid any false signals.
Got it. Got your point.
Yeah, because it's a long-term game, right? Even if you're delayed by 1 or 2 days, nothing is going to happen, right? So it's all about you stay the course, right?
So guys who are part-time market participant who want to make money, take things under their control, I think for weekend trading, this is a very good strategy. Just open your trading view. Trading view is obviously you have to take it. But I guess for this free version of trading view should be sufficient, right?
Absolutely fine.
Yeah, it is sufficient. I mean, we are subscribed, but yeah, free version definitely would go.
Free version, it's like more than enough for them. For even to build their own strategies, it helps.
Yes,
Sure,
it definitely
sure,
would.
sure. It's just that this indicator is your own indicator. So maybe some point of time you would like to, make it available to public in large if you feel whenever the
Yeah,
right time is.
we will
It
definitely.
definitely goes.
Otherwise, everyone have to then plot their own ADX, own RS, which will obviously need a premium version of TradingView. But the
True.
moment,
Yeah,
so even if someone has a free version and they access your indicator on public library, I think as a free
Mhm.
version one can do that, right?
they can do
Yes.
that. And the beauty of this is that we made all these variables very flexible, right? And let's say even tomorrow if we give the access to the public, right,
Yeah,
they don't need to exactly go with our setup, right? Let's say if
They can
someone
play it
wants to,
around. Yeah.
they
they
can
can
play it
play it
around.
around.
Yeah,
Correct. That's
someone
true.
wants to
That's
keep
true.
it 26 weeks on instead 52 weeks, they can just change the numbers here, the indicator changes accordingly, right? So
Absolutely. That's
it's
true.
extremely flexible in that
Like
way.
as you
And
early mentioned, Vivekji, the RSI length of like 14, it actually worked much better in the monthly trend that we are currently exploring. So,
Correct.
so it's all about how I interpret my version of RS. Right?
Absolutely. Correct.
and I'll show you, one of your favorite stock, Vivek, HDFC, right? The top five stocks that you always talk about,
Yeah.
right? Which, right? And you see 47 rupees in 2000 is
Ha.
when we got the entry and there is no exit yet, right? And I
Wow.
think, and per year now, I think if I'm not wrong, you get the dividend equivalent to 47 rupees,
Yeah.
right? So, and I mean, this is a kind of buy and forget. But again, should I forget it completely? The answer is no. But as long as my system says hold it, I'll hold it. Eyes closed, I'll hold it. And you see how many times have I gotten the pyramiding opportunities? Every time you see a green symbol here, it means that add more, add more, add more. If I'm gradually adding my capital to it, I would have just made a wealth out of it. Simple.
True.
We don't need to really talk about HDFC and Asian Paints, but I'm just saying, right? How this really works. There are
True.
there are a lot of such examples. Relaxo, right? It also never gave exit, right? From
Correct.
IPO till now, never gave an exit. 1.7 rupees was the entry, and 1276. Just think of it, right? So, but this is not for these blue chip stocks. This is again to really identify some growth stock which decent to good fundamentals, but ride it right till the time the stock is
Since
getting
we talk of
integrated.
fundamentals, I like, can we take your favorite Tata Motors? And this is one he has lost big.
You have been
So,
following me.
so
You know all my favorites.
Tata Motors, DHFL, and
Yes, bank.
Yes Bank. I think these three, Viveki, had brought my approximately 5 to 6 years savings back to zero.
Got it.
Right. I'm
But Tata
serious about
Motors
it.
gave you an opportunity to recover that.
Recover.
Yeah. It gave an opportunity to recover that, and that's the
I actually recovered on his behalf.
See, wow, what a
and
beautiful system. See,
you see, it gave the entry at 142, right?
mm,
And today it is at 480, right? In a year's time, it's almost 3x returns, right? And you see, it gave me but unfortunately, when I bought it, I did not have the system, right? And as I said, right, so that's the reason I lost money, because I bought it. My average price were around 320, right? And I sold it around at 110 rupees or 115 rupees, right? So,
oh, you were the one who gave money to all of us.
right.
So
So,
actually, if you could see the exit, like the system gave the exit in as early as 2017. So that way, it's more like it would have helped a lot of people to cut the losses. Like rather than like buying the dip or bottom fishing, people are really exited such stocks.
and even this is also right. I mean, this is in news for good reasons and bad reasons. Good reasons for Tata and bad reasons for its financials, right? But if you see, whenever you get a wrong signal, your losses for minimal. But whenever you get a right signal, it's multifold returns, right? It's a multi-bagger, 6x, 3x, now also another 3x. So that's the beauty of this system, Vivek, right? So
Sure.
I wish I had this 10 years back. Then probably I would not have to work today. But at least I have it now. And probably I'll see after 10 years how it works.
I hope your kids will not have to work in future. Anyway, so before we close, one of my favorites, now that we are
Yeah.
talking about favorites, CDSL.
Ah,
Let me see that.
Yeah. That's my portfolio stock.
Because my 2020 belongs to CDSL.
Yeah.
you could see the buy as early in
And you see,
2020.
and before the fall, And that this is the beauty, right? It is not that the signals came only after March fall. The signals came before the March fall, but did not get the exit yet, right? Because it means this corrected less than the index during the fall. Hence, it was a hold, and you see after that, right? So initial signal was 264, now 1500. It's 6x, right? In about 2 years. And that's exactly what our data also shows. If I go back to the slide, right, and that's exactly what our data also shows. I mean, these are the classic example, and you see this is what it says, that approximately 6x returns with about 3.5 years holding period. And you see, you would have seen, you would have noticed this, in all the different case studies that we've been through, right? It's always 2x returns, 3x returns when it is in your favor. Otherwise, you lose 10%, 20%, 30%, then you just come out of it.
And again, it saves a lot of time.
But will I get an exit at 1500? The answer is no. I probably may get an exit at 1300 if it starts going down, or 1200. That I don't know. That's okay, but still 250 to 1300 is also not a. That's exactly the point that you brought up, right? If anyone is worried about why did I not get a signal at 1500, exit signal at 1500, why it is giving me at 1300, then another setup would have given you the exit here itself, right? You would, or here itself, right? You would have booked 30% loss, and then you would not have re-entered at all, right? So it's all about what suits you, what gives you peace of mind, what gives you better sleep, and that's the most important thing, right? So health is the most most important thing than the wealth. So
Absolutely, absolutely. Finally, we all are here to sleep well in the night. What's the point
yes.
of participating in the market if it doesn't give you good sleep?
Yeah.
Great, fantastic. Sai, Shri, I think
Yes.
you guys are awesome, and I'm always delighted to hear about RS, and I can spend hours hearing about this beauty, and I can see clearly the glow on your face when you are also talking about RS. So we are like bros, RS bros.
And we are still learners, and I think all of us are extremely thankful to you, right? I mean, ever since at least I've been very active on Twitter. I mean, again, this is not that we are on record, but I can just go on record also and say this, Viveki. I mean, the amount of work that you've been doing, just phenomenal. And I always wonder, right, how you manage your time, right? You give time for face-to-face, you give time for your own trading, you give time for your YouTube videos, you have your own ads to manage, your e-learn marketing, your StockEdge that is evolving every day. I mean,
and so it's always we debate how much energy this guy carries. We are exhausted after one day.
People like you really made me change my perception, right? As I said during my intro, I was of the opinion that since I'm working for 12 hours, 15 hours in a corporate, I don't have time to probably study and then learn about the equity market if you have to make money. I think learning it from people like you, there are not many other successful people right out there who do the multitasking very effectively, right? I've learned from all of you, and then my myth was broken that yes, I can also do it. It's all about your passion. It's all about investing time, balancing it out, and the product is here right in front of you. and all thanks to you for inspiring, right? So and many people like you. Yeah.
Thank you for your kind words. And I think the only mantra which has worked well for me is to be human and work with right people and make new friends like you guys so that automatically that whole ecosystem gets built and I get the benefit out of that ecosystem as well. Thank you. I hope people will follow you guys more. Your Twitter handle is obviously the name of your company, right? So what's
Yes. Yeah, it's TurtleQ.
And I'm going to share that link below this video as well, friends. So
Perfect.
follow both of them, follow their work. If you like their theory, um, follow them on small case or whatever platform they are. I have no commercial interest, again, re-emphasizing, but it is a sensible model, especially for people who want to succeed as a turtle and make a lot of wealth in future. That's how probably the name TurtleCon stands for, that we will work like a turtle, but we will reach our destiny, isn't it?
Exactly. I mean, we could not have explained this better. So we are not in the rat race. We are definitely not in the rat race.
There's no short way to success as well. So it is all about like create your strategy and work on it towards your wealth, and the goal will definitely be achieved.
Great, fantastic. So thank you so much for this lovely face-to-face. I hope, friends, you enjoyed this. I thoroughly enjoyed it, and I'm sure you are going to find it valuable enough to share with your friends and family. And let this be another milestone to take India, RS India, to the next level. Thank you. Bye bye. Take care.
Bye.
Thank you. Thank you.
Thanks.
Thanks.